fortunate to have with us our next speaker, who brings with him a really interesting perspective and intersection of public policy and private sector risk. A former city minister and now Chief of Staff and Strategy at Acrisure, Afolami. Bim brings with him a unique lens on the changing role of government in shaping market confidence and regulatory direction. He's been fundamental in leading several government reforms, including government's post-Brexit strategy in financial competitiveness, and he now works in a fintech insurance platform managing 45 billion in global premiums. So he does bring a really interesting government-private sector perspective, and we are really fortunate to have him with us today, and he will make some opening remarks. Thank you.
Gosh, well, thank you. Thank you so much for that very kind introduction. And as I look at the photo, you can tell that this photo was taken when I was first elected to Parliament. That's what being a Tory MP does to you. But look, it's an absolute pleasure. And Chika, you'll be pleased to know that I'm a recovering politician. I don't want to offend you, my presence here. But it's wonderful to see you back at the Guildhall and to be hosted by the Lord Mayor, who, and I hope he won't mind us saying, is really transformative, and what he's done with that role. And that's not a slight on anybody else, but I think we are incredibly lucky to have Alistair King as our Lord Mayor. Last time I was here, in fact, it was probably now a year and a half ago or something, at the Lord Mayor's banquet in one of the other parts of the complex here, and I came with my wife, and everybody was there in white tie, and it was all sort of very glittering. And I said to my wife as we walked in, I said, gosh, could you have imagined in your wildest dreams that we'd be here in white tie at the Lord Mayor's banquet? And she just said, Bim, you're not in my wildest dreams. So there we are. Now look, what I want to talk to you a little bit about today is really what I've learnt in government and parliament and what that can hopefully do to help you as you think about, as a private sector, as you think about managing risk and thinking about that in your own organisations. I thought I'd start by just saying what government is bad at, right? The first thing that government is bad at is government doesn't always spend time on the things that matter the most. It often, weirdly, there's an inverse relationship between also how important something is and how much time politicians and senior officials spend on it. The insurance sector is the #1 sector in the City of London, if you look at it at any metric compared to others. It's not banks, it's not private equity, it's the insurance sector. And yet, I must confess, though I don't think I said this to the actual CEO when I was discussing maybe coming to work there, I must confess that in the Treasury, the amount of time we spent on insurance was nowhere near enough, considering the importance of risk, insurance, capital, and these huge global multinational businesses that are often headquartered in the City of London. So that's the first thing the government's bad at. The second thing the government is bad at is actually understanding commercial risk. Politicians are highly focused on political risk, unsurprisingly. But political risk is very different to commercial risk, and government doesn't spend enough time thinking about it. Let me give you an example about how government is bad at it. That's why government struggled in the phase of PFI contracts that happened from the mid-90s and back end of John Major's government and Tony Blair's government, and PFI contracts being poorly negotiated, and by both governments, both Labour and Conservative. Why? It's not because they're stupid people, it's because they didn't really understand commercial risk and the fact that the construction risk was going to have to be paid for in those PFI contracts in a way that government just couldn't quite comprehend. That poor understanding of commercial risk is another reason why the regulation post-financial crisis in some ways was poorly designed, strangled banks, in my view, far too much, and then wondered why there's a discount on British banks listed on the London Stock Exchange. There wasn't enough lending to private businesses, and capital markets were poor. Again, that's not because people are not good at their jobs or intelligent or hardworking, it's because there is a lack of understanding about how commercial institutions think about risk, and indeed the difference, as you all know, between uncertainty, which we all have to live with and understand, and risk, which is something you can calculate, price, and quantify. And another thing government is bad at, don't worry, I'm coming to what the private sector is bad at in a second. Another thing that government is bad at is when it does actually decide it's going to think about commercial risk. When it does think, okay, we're going to look at this, the sources of information are poor. And broadly speaking, it relies on what a relatively small number of people, regardless, by the way, of their qualifications as to this, will tell senior politicians they come across or senior officials. And that often, again, gets replicated throughout Whitehall and the Treasury as, well, this is what the private sector thinks. And it just comes as a result of sort of one off-the-hand conversation in a round table 6 months ago, and it gets repeated and repeated. You'd be surprised how often that happens. And then the second thing is, even when the government tries to take a rigorous approach, there is an over-reliance on financial models and an over-reliance on trying to find false precision, when actually what you need, and wait for it, you need people like chief risk officers who can understand how to measure both the financial models and the raw quantification with understanding of human nature, understanding of the commercial environment, understanding of their organizations. And I'm afraid that government just isn't very good at that. And you guys need, my plea to you is to get in front of more officials, get in front of government more, and allow your businesses to allow you to shape some of the agenda, that when your CEO goes and speaks to relevant government officials or regulators, you are part of that conversation, because I promise you, your voice, or rather the voice of managing risk, is not always heard properly. Right, so what is the private sector bad at? What have I learnt the private sector is bad at? Well, the first thing is Acrisure. This does not apply to Acrisure. Are we clear about that? What I'm about to say does not apply to Acrisure at all. And in fact, it was funny because I'm allowed to say today, we've been working on a capital raise over the last few weeks and months, and we announced it yesterday, and we've just raised $2.1 billion, valuation at $32 billion. And so what we're trying to do is shift from being a traditional insurance brokerage into a much broader tech-enabled financial services business, looking across a range of risks and needs of small and medium-sized businesses. The private sector is bad at knowing what matters to government, right? Because I'm afraid there is quite a big gap as to what businesses, often very big, sophisticated ones, think the government wants to understand, and what the government actually wants to understand. Government wants solutions that they can actually process and action. They don't want to have to think very hard. What they want is for private institutions, often who have highly competent, thoughtful people who've done a lot of work, to actually tell them what they need to do, and don't be afraid to do that. The second thing, government wants hard data. One of the biggest surprises when I went into the Treasury is, the Treasury is this huge building in the center of Whitehall, and you're told it's so powerful and you're so excited to go there. I remember when Rishi appointed me, he just said, gosh, Bim, I'd always wanted to be city minister. It's the best job, in the Treasury. And the government doesn't have much data, okay? Really doesn't know very much. HMRC knows a lot about your taxes. Pay them, do that. You'll get in trouble if you don't. But honestly, outside of taxes, you would be surprised how little hard data central government actually has. So when you have it about your business or your sector, tell them. They'll be very, very grateful. And the only other thing I'll say that private sector, I wouldn't say is bad at, but I think could do much more effectively, is not be over-intimidated by the proposed words of, say, a regulator or a government official when it's relating to a new piece of legislation or regulation. Be strong and be brave. When you think something doesn't work, go and tell them. Initially do it privately, but don't be afraid to just say, look, we're a player in this space. What is being proposed does not make sense for this reason. Or, better still, we understand the aim, but if you did it this way, you'd get a better outcome. Don't be afraid to do that. And I was always completely bemused at most people almost being too intimidated to do that, and then as a result, and then complaining 2-3 years down the track. And I would often say, well, why did you not speak up? And they said, oh, well, we didn't really think we could. So don't be afraid of doing that. Now, to bring these two things together, my two previous worlds of government and private, or my current world of the private sector, how does this come together? I think one way, and I'm not going to talk about it for too long because I know we're talking about it later, is to think about areas of emerging risks, newer risks. And I think the best example of this is cyber risk. We've heard about the M&S cyber attack that's gone on now for, I don't know, 4 weeks or so. I saw yesterday there was a food supplier of Tesco, Aldi, Lidl, and Sainsbury's, one of their biggest food suppliers, hit by a cyber attack. So this is a supplier now, not even the principal, a supplier hit by a very big cyber attack earlier this week. And cyber is very difficult for the insurance sector because there isn't that long history of losses and scenarios that actuaries can easily model against and come up with easy pricing. And there is the obvious potential scenario of a coordinated cyber attack that could bring down utilities, financial system, energy systems, which really is at a level that we haven't seen ever before because cyber is new, but really would be too awful to contemplate. And so how, bringing together again the worlds of government and private sector, how, when thinking about this emerging risk, could we move forward? The first thing we need to do is the private sector, and I don't just mean the insurance sector, I mean private businesses like the many that you represent, need to engage the government in this debate and let the government make the government realize that if something really bad happens, the begging bowl at some point is coming to the government. So the government has a very direct interest in shaping this to get it right. The government has the power to convene and knock heads together with the help of people like the Lord Mayor, as evidenced by the Mansion House 2.0 compact that we mentioned earlier. The government can also design a regulatory framework with a genuinely pro-growth and risk-on and risk-appreciated focus to encourage insurers to cover emerging risks whilst ensuring that the relevant government backstops are there if required. And the government can also do something else, which I don't think people think about a lot in government. In fact, I know nobody thinks about a lot in government, but I can tell you that I'm sure you do, which is data and understanding information. Because if you could have much more effective data sharing, which doesn't cost money necessarily, it can help develop much more effective private sector solutions and that things that not for the government to do, but enable the private sector as a whole to solve some of those problems. And we've done this before with flood re and various other things like that. And to finish, we've got to recognize, and the government needs to recognize, that if you want economic growth in a world where you have growing uncertainty, you are going to need to find a way to manage, quantify, and price your risk much more effectively. Because otherwise what happens, just to take cyber as an example, otherwise what happens is people end up having to provision more and more cash for bad things that might happen in the future. That is money on the balance sheet that now cannot be used to invest in the business, cannot be used to employ more people, et cetera, et cetera. So I think that it is so important for economic growth that we get risk right. It's so important for businesses in this country, in the City of London, that we get risk right. And indeed, if we can do this, and you should press government to work with you to do so, we can indeed, as the Lord Mayor wishes, unleash growth in this country. It's a pleasure to be here. I think I've got a couple of minutes for questions. Thank you for listening to me. Thank you. Do you want to do it the old-fashioned way and hands up? Anybody got any questions? Just don't ask me about politics, please. Anybody? No? Sir?
Sorry, you said some areas of private sector aren't particularly good at proactively engaging government. Are there specific parts of the economy you think are better than others? And what could we learn?
Good question. So I would say that the best people at engaging with government in terms of sheer time, energy, understanding is probably the banks. And what I always found amusing was the distinction between, the banks and what their engagement with government and insurers and their engagement with government. And then you look at their balance sheets. And that delta is nowhere near the same as you would expect. And I think that that's very interesting. Now, a lot of that's for political reason because of the financial crisis, etc. But I do think that banks probably are the people who spend so much time engaging, so much time trying to shape, so much time trying to do that. I'd also say the pharmaceutical sector is pretty good as well, with their, and obviously they're sort of, it's in a quasi-public sector way because of the NHS and provision of drugs and that sort of thing. But I'd say banks are probably the best. And I'm afraid I don't think insurance sector as a whole, though I must say Caroline Wagstaff is fantastic and she does the job of 1,000 people. But as a whole, I don't think the insurance sector gets the hearing that it deserves and needs. Sir.
Thank you so much, Clisper Marati from Pareto Economics. One of the things that governments are bad at is planning for the long term beyond their tenure in government. That's something that private sector can probably do a little bit better, planning for that long term. So when we engage with governments, that's the biggest issue we face. How can we have them thinking long term when they won't be there to execute on these plans? So from your perspective, how can we approach long-term policy making that actually appeals to governments so they can actually take action when they're not in power?
I will answer you, but just to push back a tiny bit, I'm not convinced the private sector is always that great about thinking about the long term either. I think that quite often the private sector is on not dissimilar timeframes from government. They're sort of thinking 3-5 years out, quite often. But parking that little response, I think the best way of getting anybody to think about something long term is to make them recognize the beginning of the long term in the short term. If you want someone to do more exercise and eat better, to lose weight, you don't say, in 15 years you're going to be fat. Nobody's going to change their behavior. What you do is you say, well, I saw you last month and now you're looking a bit, right? That is the way to get somebody to deal with their long-term problem, right? And we all intuitively understand that. Governments are the same. Practical example, if you want the government to think much more about handling cyber risk, for example, we've got to show them the amounts of money that have been lost that look relatively trivial in the economy, say from what's happened with M&S or these food suppliers, and say, if our projections are right over the next 2 years, this will double, and over the next 5 years, this will happen. So the government starts to realize that now they're losing as well as in the future. That's really the only way you can do it. Right, so then I think it's probably my last one, isn't it?
Justin Cash from Dow Jones. One of the things that you started in motion during your time and then came in was the cap on banker bonuses being scrapped, obviously. Yeah. It's a key part of this red tape environment we talk about. Do you see any potential risk in us going back to poor incentives and some of the poorer practice that we saw in the city around the crisis if we don't make sure that now that cap is gone, that we actually have good processes and controls in place?
I don't necessarily think that, though you're right that you always have to be vigilant about that sort of thing. What I do think, I'm afraid, is that we often overregulate the wrong things. And what we need to do is think that London, we don't deserve to be a global financial center just because every single day you've got to fight for your place in that system. And I think that we just have to make sure we've got an environment that always promotes that. And for the record, I think my successor as City Minister, Emma Reynolds, is fantastic. And I know that, she understands these issues very, very well. She's a good person and will work very, very hard. Okay. Thank you. Really, really appreciate your time. Absolute pleasure.
Thank you.